If you've always wanted to understand how those stock charts really tell us a story and when we should enter the trade, when we should exit and take a profit, this is the video for you. In the 1970s, people used to trade stocks based on fundamental data, profits, revenue growth, margins. And then someone came along and said, now I'm doing it on the chart. And the chartists within a few years wiped the floor with the fundamental investors or traders because it was just way, way, way better. So there are two worlds. The long-term investor looks at stock fundamentals, which I also do. But if you want to make money, not in decades, but in weeks and in months and in days, you must look at stock charts and understand them. And before I became an investment banker, I used to watch people on TV who did the chart analysis, and I thought, what a load of nonsense that is. He's just drawing lines. He's making this up. What a load of bollocks that is. And then I learned it, and I now use it to make money for myself every single week. And I'm going to teach you that here. 5 simple steps, okay? Before we get into that, I've also written a 25-page document which breaks down the full basic understanding you need for you, and you can get your pause on that for free in our Facebook group. Just go to felixfriends.org/Facebook group and download it. If you can't find it, send me a message over there and ask me for it, and I'll gladly send it over. That's the first thing. And then if you want to learn how we make money as well, it's, as I'm recording this, beginning of March, we're up about 15% so far on the year. We did about 105% last year, 126% the year before. And I'll teach you that again, completely for free. The system that I employ, felixfriends.org/webinar. On the coming week, I'll be running a live trading session. Check it out, felixfriends.org/webinar. So now let's jump straight into it. Now I've pulled up on the screen here a chart. It doesn't matter what the stock is. It doesn't matter what the time frame is. The theory is exactly the same. So I'm looking at Costco here. And what do you see when you look at Costco? Well, there are a couple of things that I see and that I want you to understand. The first is zones. What's a buy zone? What's a sell zone? So say we start here on the left and we assume for a moment that we are living somewhere over here on the left-hand side. We don't know the future yet. You mark the previous high here with a horizontal-ish line. And then you get that nice rally up, which is glorious. And then it starts to come down. And where do you exit? Well, you exit, whoops, what happened there? You exit precisely where we cross the horizontal line at the previous peak level. That is your first exit point because the previous peak acts as support. Once you breach that, you're in trouble. So you exit because we want to make money in a safe and secure way. We don't want to YOLO and hope, well, it's probably going to go back up, right? No, that's not the way it works. So that's really, really important. So just to break that down again, you mark the previous peak with a horizontal line. And then once you breach below that horizontal line, which we did right here, that is your exit point number 1. Okay. Now what happens? Well, the stock continues to go down, the stock continues to go up and does its thing. But what do you do as an investor? Well, you're looking at zones, and the zones I want you to look at, and I'm just going to use a different color, is one, you get a very nice, actually, let me get a straight line. You get a very nice high here again. Up slightly above it, but it doesn't really matter. So again, you draw a horizontal line forward, and then you can do the same thing on the bottom end here, and you can see that we've got 2 types of zones here. We have a zone where sellers appear to take over. Otherwise, we would be breaking out above that. So we get resistance. And then you have another zone down here where the buyers are in charge. And we can see that because we've got a bunch of support here from those. So the stock is basically moving sideways, and yes, there are ways to make money out of that, but let's just keep it simple and say we're only buying and selling stock. So what do we wait for? Well, we wait for this area up here where we are starting to break through slowly, slowly, slowly. And then the real kicker comes in where we are actually properly exceeding this zone here, right? So this is your buy signal. If I could spell the word buy, investment bankers in 3-letter words, it's a struggle for us. And when do you exit? Well, at the moment you don't, because the party keeps going up and up and up and up. So how do you secure yourself? Well, now you've learned two things, right? You've learned where you exit. You've learned where you buy. And now you're wondering, well, where is my stop or my stop loss, perhaps? And the place for that is where? So let's just put the line back in where you entered. So you entered here. This was your entry point, because we were exceeding all the resistance, right? So the buyers won. And then on the way up, you don't want to miss the party, right? You're like up 10%, you're up more than that, 20, 15%, but you're thinking, what if it goes up some more? FOMO kicks in, greed kicks in, right? It takes over, and that's the way we're programmed. Well, what do? You do something a little bit smart, and it's called a trailing stop loss. So as soon as your trade becomes profitable, and say you are here, which means you're now about 8% up on your money, what do? You set a trading stop loss, and you could set that at, say, minus 8% compared to where you are right now. And what would that do? Well, say you went up and then down with the stock price, you would exit at your entry level. So your entry would become your exit. Now that would give you a zero-sum game. You wouldn't make any money at all. And you'd be like, well, that sucks, Felix. Well, you're in luck. Stock keeps going up. So your trailing stop will keep going up as well. But at some point, you're going to peak up here and you're going to come back down, and then your stop gets triggered. And what have you done? What have you achieved? You have, and let me show you exactly what you've done. You have entered and you have exited here with a 25% gain. I can show you in bigger. See that? 25% gain. And that's the secret. You must set up your exit strategy at the same time that you set up your entry strategy, because you cannot trust yourself to make the exit call. Because if you hadn't set up the exit, here is what would happen to you. You would be sitting right here, and you'd be like, oh, it'll probably recover. I think it's been such a good run. It's going to go up some more, and it's going to come down some more. And then here you're thinking, oh, I've lost half of my profits now. Well, let me wait till it goes back up to here, and then I exit. But then it doesn't go back up to there. It keeps going down and down and down and down and down and down. And now you're losing money and you're panicking because you don't want to tell your wife. And that's the problem that retail investors have, lack of rules. So please follow these rules and you will do tremendously well. Now, there is a bonus to this, and that is there is an indicator. It's so simple, it's almost criminal. Click on indicators here in tradingview.com and type in volume. You click on volume, and now bars appear at the bottom. What's the sense in these bars? Well, they tell you whether or not a rally is going to last. They tell you whether or not the party is about to stop. And give you an example. So say you were in, where is a nice example? So let's just say you were in on this glorious rally up. How do you know we're about to top out and fall off a cliff? Well, you can look at volume down here, and you see how volume picks up very, very significantly here. Very significant increase in volume. And what happens after these 3 massive volume increase days? Well, the stock keeps going up. It then drops off, and there is silence on the floor, which means no one's really buying. And that would have been your warning to get the frick out and take some profits. And then what do you get? You get one more green day on low volume, that one here, and then you get big ass red candle and the thing collapses. So volume tells you whether or not everybody is still buying or whether everybody is selling. So when you're going up, you want high volume, assuming you're bullish. And when you're going down, like here, you want your volume profile to come down. So stocks coming down, where is the bottom of the market? You see lots of people selling, less people selling. Less people selling, and then we start to establish the next journey up. So watch this completely free indicator down here, and you will instantly be smarter. If this is fun, if this is interesting, if this is maybe a little baffling, do the two things I mentioned at the outset of the video. One, hop over into our Facebook group. I'll put the link down below in the description, and look and read through my 25-page write-out, because it's sometimes easier to read things and review them rather than just watch a video. And also come and join me for the live trading training next week, where I will show you how I do what I do, the exact strategy and system, which ultimately depends on this, what I've just taught you here. So you've already learned a lot, but we now need to see, how do we really automate that? What are the best trading strategies for it, so that we don't just buy stocks? Because that's a nice thing to do for the long run. But if you want to make some short-term revenue, if you want to make some income to maybe replace your job or something like that, then trading is actually potentially the answer for that. So come and join me, felixfranz.org/webinar. And if you enjoyed this, hopefully somewhat educational video, then abuse and fiddle with the buttons in front of you. And I hope to see you on the next one. Ask ChatGPT. Ask Google what ChatGPT is, and then ask him what NVIDIA does. But the margins are like, oh my God. I mean, it's insane. It's like a software company that happens to sell hardware. That's how the margins look. It's just